This is where trading major levels and closing on minors is where you're going to, again, produce probably better formed trades.
Now, if you see this one, although there's some deja vu on the gap, look at how this gap reacted, okay? This gap reacted with a major push down during Asia and London. This gap did almost nothing, right? And has literally pushed right off of the previous low, okay? So that's what makes me feel like this one might be filled kind of quick. All right, but I think that's going to be confirmed with a recapture of London high and a put and basically just a rip through it. All right, because you can see where we came up to on the high. Look at how exact this is, right? To where this body of this candle started is where we've painted the high. So we've come up to the, let's look at how many. So this is the quarterly open, yearly open, monthly open, quarterly open, yearly open, monthly open, weekly open, daily open, Monday high, previous quarter mid. That right here is this line. It's not that it is a trap if it goes below 6003. It's the fact of the matter is that most breakdowns are traps. All right, if you review every single breakdown, and again, it's not all breakdowns are equal. Some of them do play out. All right. But again, even so if we even look at this session here, most of the time on ES, when price is moving down, if it's in an uptrend, it likes to make sharp downturns. Right now, even here, we cleared 64. Right, we cleared 64 here. Everybody was probably selling right here, and then it's squeezed right back up. And so the reason that most breakdowns are traps is because in order to squeeze, buyers need liquidity. And so they will force price down in order to gather up liquidity, get to a certain price that they like, and then they will squeeze the crap out of sellers, forcing sellers out of their positions. All right, we wait for it to come, establish a range, and then take buys from there. So let's pull up the bands today on gold. Now we're kind of coming down from an A book that we had over here, but again, it's okay. If you missed that, it's not a big deal. So let's look at gold here. The upper band is at 901. Coincidence? Not really. Right at the top of this range. And the lower band down here at 871. Right? Actually, right just about at the previous high. Okay. So again, I wouldn't be trying to call the high. I'd be looking for gold to come down here and base somewhere. Now, again, we're in a precarious situation where we do have the kind of a range built up here. Okay, and so gold, it based out for a little bit inside this range, didn't break back into this order block, and is now forming a new high. So I would be looking for it to make an attempt back into this range and then to fail. Don't worry about the lines. Look at the uptrend of price action and how we're moving up, and look at the pattern that gold takes during an uptrend. It takes a very similar pattern to ES. And again, gold it's very market driven, somewhat politically driven, but based upon the overall sentiment of the market is where gold is really driven. So again, sharp down, base up, base, leg up, down, slight base, recovery, push back up, sharp down, squeeze, base. Kind of takes a similar path to that ES does on its leg ups, right? Sharp down, recovery, new squeeze, sharp down, recovery, squeeze. So that's what we're doing over and over again. So on these sharp downs, really all you have to do is wait for the squeeze. You just have to wait for the recovery at that zone. All right. And so again, on gold today, I'm still not looking for sells on gold again until we break a major demand zone, which I think is down here in this order block. So there's a pretty far way to go from where we are now. Now gold's kind of basing out up here.
So Nasdaq pretty much, and it took a similar path as ES yesterday, where it basically just bounced around all day. we really didn't do much until about the power hour. So on Blackwell TV yesterday, I took 2 losses earlier on ES when we were bouncing around because we did not continue necessarily the trend up. All right. Yesterday on NAS or on ES, but we kind of range traded, which I'm not surprised, right? Eventually price has to discover itself. And so we shouldn't expect, I mean, we had a good couple of days there of literally just up and up and up. So we shouldn't expect that obviously to happen every single day. And so there was bound to be a day that we just became, range bound and didn't go anywhere. So these boxes here resemble Asia session in London. If you're not aware, Asia is from 6 p.m. EST to 3 a.m. And I make London 3 a.m. to 9:20. London doesn't technically close until noon, I believe. But I don't really care about it as much after the U.S. market open. And then obviously in the afternoon, the only thing driving the market is the U.S. And so yesterday, let's see where we were doing our analysis. Yesterday, we were coming up, and again, I've been saying I'm really only looking for buys on ES and NAS for the time being. And so for NAS, we are building this demand zone up here. Now, what we did have in the power hour of yesterday was a very, very beautiful squeeze. All right. So on NAS, I believe I said I mainly wanted 21,690 to hold yesterday. 21,690 held this demand zone up here. And so we did come down in the early morning on NAS to paint a new low. All right. And on ES, it did the same thing. And this is where I got in. All right. And I held and closed out majority of my position at one of the lines on ES, then held the rest to the top to where it got closed out. And then we literally just ranged. So this is the kind of junk that you got to stay out of.